Futures trading is risky and can result in substantial financial loss. Never put a futures position on without a stop-loss order in place.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short Term Trading Live with Oscar. The sky's falling. Did you see that stuff today? The markets came off all over the place. In fact, I only seen 3 green markets on my board for the whole day. And we caught one of them last night, and we made money on the upside in the currencies. How we got away with that, I'll never know. But we actually bought March Euro, if you guys were following me last night. We bought the March Euro at 130, 183. Rallied up, we thought we'd get to 132.50. It got to 132.40 at that point in time. I flash updated, everybody got out. That was before the sky started falling. So we made money on the upside in the market. That's incredible because, boy, did this world get routed today. I got a couple of charts to show you. We'll talk about that. I did mention that we'd have some scale orders for you in the grains. We had a great pullback today. It's a great time. I'm glad I didn't give that to you for yesterday because you might have started scaling into it. Today gives us a better opportunity. We'll go right to those scale orders first, and we'll talk about what happened today. Okay. This isn't actual scale trading. That's something that was developed a good 20 years ago, maybe even longer, but it really came into play about 20 to 15 years ago. There used to be scale traders all over that would place orders at levels as a market came down, calculated, and then on the way back up they would start selling out. The first one that they bought was the first one out, first in, last out, and they would start doing that until they would buy one, sell one on the way down, buy another one, sell one on the way down, buy one, sell one. They reached the final level, and on the way back up, they'd get out of the whole lot. Well, we're going to take a variation off of that system and just buy into this big dip because we've seen the nonsense about the Caterpillar, which you know I don't think is nonsense. I've shown you charts time after time about where these grains look like they're going. A one-day route does not change the appetite of the world for grains. The people are going to be here. We're still going to need the materials. These prices are going to recover, even if the stock market continues down, and that's a whole nother story that we'll get to. So let's go into that. Right now, May corn. If I was going to scale into this move for long term now, we're not talking day trading here. We're talking about long-term trading. We're looking for a couple of months before we get rid of these, unless it happens quickly. I will certainly keep you informed on that. I am building into a grain position here. This is not short-term grain trading. This is shorter-term, long-term trading, if you will, where we're going to buy now and a couple of, who knows when we'll get out. It's price that we're going to look for. So we're going to look. I'm going to look to buy the May corn around 422. We break lower, I'll buy more at 413. We break lower, I'll buy more at 404. And then if we get below 390, well, hey, then we'll take another look at this thing. We may have to put stops under there, under 390. And if we get below that, you know what? Then we all take our losses and we decide we were wrong about this. Or at least Oscar was wrong. You can blame me. I'll take the blame. But if we get below 390, then for me, I don't know that I want to continue scaling into the long side anymore until whatever happens under there is finished. So again, I'm going to look to buy around 22, around 422, around 413, around 404. And unless we get under 390, I'm just going to hold them for the ride back up. That's what I'm looking for. In the May wheat, 475, I'd be a buyer. 465, I'd take in another one. 449, I'd pull in another one. And unless we got below 429, I really wouldn't give it much of a thought after that. I would just hold it for the future. Of course, you never ever hold something and buy more. In other words, you don't average into a losing position. I would never advocate that. But I'm talking about building into a position and that you scale into. Don't look at that as averaging. If you say the word average, I gotta run. I don't average, ever. May beans. I'd buy one at 764. I'd buy one at 754. I'd buy one at 738. And unless we got below 715, again, I'd put them away and hold on to them for a nice run up in the summer. Let me just give you those numbers one more time. In the wheat and the beans, you got 475, 465, 449. Below 429, call me, we'll talk, or we'll play stops, or you handle that your way. But below 429 starts to make me wonder. May beans, 764, 754, 738, below 715 again, we'll have to take another look at it. So keep that in mind. I'm not telling you that you should go in there and buy it. I'm just giving you levels where I think it would probably be advantageous to build yourself into a long grain position. The S&P. Woo! I don't know what to say about that today. That was incredible. I can say this for you traders who, well, first of all, we tried to sell S&P last night at 56 and change, or 55 and change, 1455 and change. The high was only 1452 and a half. We started to come off. We got into the 1440s. I flash updated and said to everybody, cancel your orders. We've missed the boat. You know what? When a day is going to, and I don't know for sure it's going to get that volatile, but when I see something taking place, which prompts me to say cancel all your orders, something big is about to happen, and it's irresponsible of me to have a lot of you traders in this market when it's moving like that. There's no way I'll have time to get in touch with everybody, and it moves so quickly. By the time I say tink, tink, tink to you, the market's $8, $10 in another direction. So I had to have you guys cancel all your orders. I hope some of you caught the down move. Again, it's just irresponsible of me in a market like this to tell you what you should be doing. Nobody knows what to do when it gets like that. You hope that you're short, but what if you're long? That being said, you know what? I would much rather be on the sidelines wishing I was in a market than be in a market and praying and wishing that I was out. And that's kind of what probably happened to most of you guys if you're only following my trades from yesterday. Last night, you saw I flash updated and sent everybody out. But imagine if we were long and couldn't get out. Our stops didn't get hit for some reason. You know, in fact, we're going to get to that in a moment. A lot of things could have happened to you today. You know, when you see a market move like that, if you don't have proper management techniques and you don't keep your powder dry as far as your emotions go, you know, today's a day that they carry the boys out. You know, guys get carried off the floor on days like this. You never see them again. Lots of accounts get closed. Lots of things go wrong a day like that. So again, I had to tell you to cancel orders because I just didn't want to be responsible for something going wrong on such a big day. That being said, let's take a look at something. The importance of stops. I'm going to show you a chart in a couple of minutes. The importance of stops is a conversation we need to have today. I got calls from people today in a panic. Oscar, what do? I don't have my stop in. Well, that's insane. Haven't you been watching my videos? What do you mean you don't have a stop in? Wrong, wrong, wrong. You have to have your stops in. And this is exactly why. In a moment, I'm going to put up a couple of charts, and then we'll do some nitty-gritty on one of them just to take a look at what could have happened without your stops in place. It is so important to place stops, and again, not only to have them in, how to place them, and when to place them. So let's go over that again because, boy, is this important when markets moving like this. Let me throw a couple of charts up real quick. This 40, you know what? Let me move this a little closer to the camera so that you can read. Can you read these words, Mikey? If not, zoom in on this one for a moment. Okay, you good? Yep. The 48-day exponential moving average was taken out, I guess, early part of this morning. We broke through that and just got routed. I mean, look out below. Talk about the sky falling. I wanted to show you this chart because the next thing that we're going to look for, if we have one more routing day on the downside, is your 200-day moving average, which comes in at 1363.25. For any professional traders out there, if you got guts and you got money and you're ready to trade, if we get down there, that 200-day moving average, jump in and buy it. 1363. So like 1366 to 1362, jump in and buy that thing. That's what I would do there. I'd give it a day or two after that. I've seen these markets have moves like this where they turn around and explode momentarily. You know, the next day, 2 days later, once all the weak hands are out, they turn around and explode. Is that going to happen? I don't know. But I will say if it gets to that 200-day average, I will be a buyer. Okay. If you want to slide that over here to this Dow Jones, thank you. The importance of stops is something that we need to discuss here. Look at the size of this move. Here's today, from the high to the low. Boom. That is a one-day bar. One-day bar right there. There are people that had orders in to either get long or short somewhere up here, and a lot of them do not trade with stops. Okay, that was at a, we're trading in the morning. It doesn't even matter what markets. I won't even put numbers on it. You're trading in the morning, you're long something, and you don't put a stop in because you're the type that knows if the market moves, I'll get a call from my broker. I'll look at the screen at some point. Well, you know what? If you got up to get a drink of water today, you might have lost 10 grand on that drink of water alone. Without your stops today, look at these levels that broke and broke and broke, and it never stopped. Even when it stopped for a little bit of time, it turned and cracked again. You have to have stops in. Ladies and gentlemen, listen to me. Without sell stops, you know how many people got carried out of this place today? Oh, I don't want to say the floor or off their computer because you don't know where they're trading. But do you know how many people lost their fortunes today because they did not put stops in? You have to have your stops in. There is proof. I mean, look at the size of that move. That's the Dow Jones. The whole world trades it. Imagine what happens in the thinner markets without stops. And there were people saying that their stops got hit and they didn't get filled at their exact levels, which means their stops got ran a little in a market like S&P Mini that trades 1 million plus contracts a day. Imagine if you were in a thinner market and without a stop. Forget about it, whether they're thin or not, your stop gets blown through. Imagine if you were in a market today and you had no stop in. I've been talking about stops day after day after day. And I'm glad to see that something happened to prove my point. I hope nobody got hurt on that trades with me. But hey, place your stops. I think from now on I'll show this chart instead of saying place your stops. That's an enormous, major move to the downside. That's taken a lot of money out of people's equity. Okay, I just wanted to express that. Stops are very important. Don't forget your 200-day moving average in the S&P, and we'll back this camera off a little so you can just take one more look at those scale orders if you need to. Remember, this is not scale trading. This is building a position for a slightly longer term move in the greens. Okay. I think we're going to wrap the show up with that quickly. 422 in the May corn, 413, 404. I'd be a buyer at those levels. Below 390, let's talk. Then things are changing. May wheat, 475, 465, 449. Below 429, again, let's talk. In the beans, 764, 754, and 738, 3 buy levels for scale traders. Below 715, hey, who knows? Okay, no one ever knows what's going to happen. We all know that. Omni sure did ask for this thing to come down. Omni sensed something was going on, and really Omni sensed something going on when I sent out those flash updates to cancel your orders. So far so good. I didn't get you into it, but I kept you out of it. Which, on a day like this is probably just as good. Who knows what could have happened if you panicked and put your orders in wrong. But again, back to those stops real quick. Remember, every day I talk about if you were short the market today, if you were looking to buy S&P today, and if you follow my instruction and you placed your sell stop first before your initial buy order, there is a good chance, depending on the day, that your sell stop got hit first and you got short and made money on the downside trying to get long. If you placed your sell stops first, there is a possibility that could have happened to some traders out there today because of how quickly we cracked. So again, place your stops first in case a move like this that you just seen happens. At least you'll be short for it and not long praying and wishing that you were out. That's my little lesson for today on stops. Wow, was it a day? Well, take a look at the scale orders. We'll see what we can come up with for tomorrow. This thing has to cool off for a day before I give out buy and sell recommendations. I don't feel responsible giving them out. So there'll be no actual hardcore buy and sell recommendations in today's video. Keep an eye on those grains. If something pops up, stay at my chart. I'll flash update you guys. Stay at my site. Okay, don't forget, when the U.S. market sneezes, the rest of the world's markets catch cold. That's a saying that's been in my industry for years. These markets that are tumbling now probably are doing it because of what they've seen here, and likely they'll follow us right back up if we head back up. So don't forget the rest of the world's reaction. Try not to look at that when you gauge what you should do tomorrow in the S&P because they're following our lead, but a day behind. Again, don't forget, keep your powder dry, keep your stops first. When you're at my YouTube site, www.youtube.com/futuresanalysts, hit the YouTube button and hit the subscribe button at YouTube and subscribe to my videos. You will get them the moment that they're released from us. If you'd like to get on my flash updates database, and let me tell you something, flash updates last night. Lou, I'm glad you were right with me. I got the message from Lou the next day, right in the morning. Oscar, nice, and the Euro. Lou stayed up 2 in the morning, saw my flash update, made a couple of dollars with me. You go get them, Lou. Flash updates are essential for getting you out of markets. You know, when I got Lou out of that, if that turned and dropped with everything else, we would have been the only guys who made money in anything that I know last night. So stay on top of these flash updates. If you stay at my site, www.futuresanalysts.com. You'll see the flash updates come the moment I type them. I hit the button and they're right there on the screen for you, so you don't have to wait for the emails. So go there. You can hang out at the forum waiting for me to do flashes. I come to the forum all day long. You can't, well, I certainly will be spending a lot more time than that, and I got my site under control. I wanted to mention one last thing about the site. For you people who are signing up new, we're having a little bit of a glitch at the moment. It doesn't seem to be shooting you back your password. Stay with us for a day or two. I promise we'll get all of that under control. For you Gmailers out there, our Gmail service from our site to you, that's not working either. It's not sending to any of my Gmail guys. So we're working on those little problems. But if you stay at the site, you don't got to worry about the email because you get the flashes right there. If you need me, call me, 718-351-2266. Give me a call. We'll see what we can do. Don't forget, flash updates are essential. Place your stops first. Place your stops first. Never trade without stops. Good luck, traders. I'll be in touch with you tomorrow. We'll find some trades when the smoke clears. Go get them, guys. Good luck. Traders, one last thing. Something I was thinking about today and I wanted to make sure I brought to your attention. Years and years and years of me trading these markets, I've seen things like this happen. And again, I mentioned it a few minutes ago, a lot of times they turn right around and head straight back up, so watch out for that. But the point of this, coming back into the camera, was this. Tomorrow morning, we're going to get a series right off the bat of traders or brokers calling traders that didn't know this happened during the day yesterday, that didn't realize that the market has cracked the way it's cracked, and they're getting calls from their brokers saying, look, you either owe me margin money or I have to get you out. What would you like to do? I call that margin selling. Across the board, you're going to get traders to liquidate other holdings to pay for their losses in the stock market. So the likelihood is you get the knee-jerk reaction down first in all the markets, and if it's not the beginning of a real bear, which I'm not ready to call it yet, you'll get the knee-jerk reaction right back up. So watch for that tomorrow. First, the margin selling, that I like to call it, comes out till about 11, 12 o'clock. Hello, Dr. So-and-so, lawyer so-and-so. I know you weren't watching yesterday. You must have seen the news when you went home last night. But look at how much your account is against you. You have to send in more money. Well, where do I get it from? Liquidate some of my gold, liquidate some of my beans, and give that money over to my S&P position. That's what you're going to get, and you're also going to get the panic out of the S&P, probably initially. That's generally what I notice happens after markets like this. Just thought I'd bring that out to you. Margin selling will likely take place first. Keep your powder dry till after that initial down reaction, and then think about where you want to trade. Good luck, traders. Be careful out there.